Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, March 9th, 2018. So again, quite a bit to cover this week, so I'll be moving relatively quickly. Stock futures push above an important level. NASDAQ is at all-time highs. We'll look at some individual names. I'll discuss how to determine the prevailing trend of a stock, and I'll give a General Electric example as a bearish example. We'll look at bonds. Again, bond proxies are rallying. Forex Analysis later on. Gold, oil, natural gas. We'll look at cryptos that are approaching bear market levels. All right, let's look at stocks. Here's S&P 500 ETF SPY on a daily time frame. On this chart, please notice that we have four colored lines: the green line, the blue line, the red line, and the yellow line. These lines are calculated based on price by the calculators that I programmed. So I'm going to be referring to these lines in basically the entire presentation. And you can find out more about them at MasterChartsTrading.com, and you can have these same lines on your chart with your TradingView account. Simply ask me how to do that. It's super simple. So without further ado, S&P 500 on a daily time frame. This is a bullish chart. Futures actually look even better. Here's ES continuous future, ES one exclamation point on the TradingView interface. Notice that we had bottomed. We had 1, 2, 3 touches of this blue line, which I would consider support line, and then we rallied off of it over the past week. Most importantly, I think, is that we made a fresh high as compared to the previous high that occurred here on the 27th of February of this year. Now we have a fresh high. So to me, this looks like obviously a bullish chart. And I think fresh highs are more likely, well, significantly more likely than a reversal. QQQ made a fresh high. And again, this is an alert that was sent to my subscribers here. So QQQ is at fresh highs. Technology is leading. There is XLK, for example. Technology is leading, and this is a very good sign for the general market, because when a very aggressive sector such as technology is leading, I think it bodes well for the overall general economic outlook. So within the technology sector, we can look at 3 stocks that are standing out. Here's Apple. That do stand out, rather. Here's Apple on a daily time frame. I sent an alert to subscribers here, then up 12%, so it's pretty nice bounce for Apple, and it is at fresh highs, so this is obviously a bullish chart. The other one is Microsoft, also excellent looking chart at fresh highs, and additionally here's a buying opportunity that was on the 4th of December, and several buying opportunities here just a few weeks ago in February of 2018. And of course, we can't forget Amazon, again at yet another fresh all-time high. And notice again a couple of very nice buying opportunities. This is a speculative aggressive stock, so I guess we will need to be looking to buy around the green line, and you can see there were excellent buying opportunities there. All right. So a question always or quite often comes up is how do you determine the trend of a security? How do you determine the prevailing trend of a security? And again, I am I've tested many different systems myself, and until I finally made something that is that works for me, so to speak. I couldn't figure out how to determine the trend, but then once something clicked in my mind, I realized how to determine a trend, and since then I was, my life really simplified quite a bit. So here is General Electric, and we're looking at the chart of General Electric as it was in 2017 and February 2017. Now here, up to and including January of this year of 2017, you can see that the price was above blue line. Then we started to sell off, and notice that we closed below this red line on the 2nd of February 2017, on 8th of February 2018, and we continued to just kind of meander here until we sold off significantly, and we actually closed below this yellow line right there on the 1st of May 2017. So from this point on, this to me means bearish bias. What does the bearish bias mean? It means that I will only think about selling. I will not think about buying. When will I start thinking about buying? Following this close below the yellow line. I will only start thinking about buying when or if we close above this blue line. So back in May of 2017, this would have been my thinking. And here, if I was hell-bent on shorting stocks, I could potentially short it. Or I could potentially simply stay out of it. If I have a, strategy, if my strategy is to only buy, in other words, to go long, then I can simply stay out of it. But if my strategy also calls for a potential shorting of the securities, then we could potentially short here. So let's see what happened afterwards. Notice that shorting immediately upon the breakdown below this yellow line would have been extremely rewarding almost immediately. And here General Electric again bouncing. Notice that it bounced exactly to this red line but then sold off. So from this point on, I have a bearish bias, and I will only entertain bearish trades. Notice that this basically continued until very recently. This is 2017. Notice again, nice opportunities here to short. Very weak stock. It's been shorted, at the yellow line basically immediately, sometimes even below it. It's very weak, and it still continues to behave in such a manner. So again, here we are almost a year after the initial breakdown of the stock, and let me show you where the initial breakdown occurred. It was in May of 2017. Notice that what happened afterwards, the price of stock was more than cut in half basically. We came down from 29 to about 14 bucks, 15 bucks. So the point I'm trying to make here is we have to simplify things and use a method which works for us personally as traders to develop basically your own trading style. And it's something that needs to be developed by the trader themselves. So here again, I wanted to point out that this particular security is still in a downtrend, and I would not even entertain the possibility of a turnaround until we see a close above this blue line, which is a significant push for this particular security. Let's do a very brief market breadth review. So here's S&P 500. On the daily time frame again. It's from my old charts back from MasterCharts.com. I still use them occasionally, but I'm not as much. I'm not using them as much. So for market breadth, we can look at advanced decline line. Here's advanced decline line. Excuse me, I have to reposition some of the things here. About this way. Hey. Excuse me, I'm just going to delete it, it'll be easier. So here's advanced decline line for S&P 500. Advanced decline line is hitting fresh highs, 4763 versus 4743 here. It's fresh high for advanced decline line. Advanced decline volume is also approaching fresh highs. Very close. So there's no major divergences here. Actually, I showed several charts in the past of this same market breadth type, and I showed that actually there are bullish divergences, and here is that bullish divergence on NASDAQ. Here's QQQ. I pointed this bullish divergence out a few weeks ago, meaning that we have a fresh high on the advanced decline line, but at that time we did not yet have a fresh high on the actual index, so therefore I classified it as a bullish divergence, and this pullback towards the 50-day moving average would have been a good buying opportunity if you use moving averages, which I don't. And here's that same QQQ on my charts, and I was buying basically anywhere around the blue line in this area here. So overall, I don't see really too many issues. Again, bullish divergence here on the, and there's another bullish divergence right there. So let me annotate it in real time for you. Here's that bullish divergence. Okay, we notice the number 2891. This is higher than the previous high of 2852. This is a bullish divergence on the advanced decline line for the small caps. In other words, again, I'm seeing a fresh high on advanced decline line, but not yet a fresh high on the index itself. This is a bullish divergence, another bullish divergence on balance volume. So overall, I see a bullish market, and I don't see any reason to short it anytime soon, really. All right. Yep, that's it for the stock market recap. So let's continue to bonds. Okay, let's continue to bonds. Here's bonds on a daily time frame. TLT 20+ year Treasury bond fund. I personally had a position on the long side because I thought we were going to go higher. I was obviously wrong, and I closed my position here on February 2nd. Currently, we're trading below this yellow line, so below this support resistance line. So I'm thinking this is a bearish security, so I would only entertain a bearish outcomes, not bearish outcomes, but rather bearish trades. So if I was to trade this, I would only short it, and ideal place to short currently would be around 121. If it gets up there, we could just simply see this sideways trading followed by another leg down. In fact, here's LQD, which is kind of looking like it's doing that. Kind of traded sideways and then taking another leg down. LQD is investment grade corporate bonds. Yeah, at fresh lows. So I'm 100% out of bonds of all sorts, including junk bonds. I don't have any junk bonds. I sold all of my bonds, back in beginning of February 2017. This rebound that started from 9th of February 2018 and then kind of ended here on the 26th of February. Notice that this arrow was there. I put it there during the previous videos. So yes, indeed, this is a dead cat bounce. In other words, it's a bounce. It's a bounce that should be shorted. So if you shorted for some reason junk bonds, you could have probably made some money already. Again, we're coming up on this red resistance line, so I would be, if I was trading it, and I don't, I would be looking to short it again. Some of the proxies are behaving, and I mean proxies of bond proxies, are behaving potentially as if we may see a reversal. So for example, here's PGX, which is a preferred portfolio, with a big rebound and possibly already stalling here. So we'll see where this goes. We could also reverse. This could be like a V-shaped reversal, and if we do close above this blue line, then I will definitely think that we have reversed, but we have not yet done so. So let's look at some of other bond proxies. Here's one, XLU utilities, again on daily time frame. So as early as January of this year, I was already cautioning against owning utilities. I personally had some utilities, but I closed most of the positions, and I closed all of them of late. I'm not really recommending any utilities currently. Back on the 2nd of February, we had a breakdown here, and this is where I would consider it a breakdown below this yellow line, and this would where I would consider it to be in a bear market. Now you could short utilities, but I would probably avoid it. It'll be just easier to avoid it. Another bond proxy, IYR real estate, nice big rebound towards this red line. So I would expect resistance to, sellers and resistance to appear around 75, 77 or so. If the resistance doesn't appear, then we could see a further appreciation, and then we need to look at the price action to time the short. Or you could also stay out of this security and simply wait for it to settle down. So I don't recommend shorting to new traders, especially shorting of equity, and real estate is a equity fund, because those are real estate investment trust stocks. So this could indicate that the bonds are also due for a relief rally. So here is relief rally that is possibly brewing in TLT, a low, but I don't like this. I thought we were gonna go higher, but now we gapped down here on Friday, so it's also a possibility we'll simply continue lower, despite any kind of potential bottoming patterns in the bond proxies. Okay, that's it for bonds. Okay, let's continue to Forex analysis. On this chart again you see 4 lines, yellow, red, blue and green line. These are my proprietary MasterChartsTrading.com indicator lines. You can have them on your chart. Also contact me at MasterChartsTrading. So here's dollar index on a daily time frame. In a bear market, I think this is a bearish security. Latest potential short was on the 1st of March, and actually this would have been already a profitable trade if you were trading DXY, which you can't unfortunately in America. But you can trade euro. Here's euro on the euro versus US dollar in a daily time frame, and there would have been a nice alert, or rather a nice entry on the long side just a few days ago on the 1st of March. Kind of feel that maybe dollar is overdue for a slightly bigger bounce, because when I get to gold, I have a feeling that gold assets are acting as if dollar is about to appreciate. And I'm kind of, there's a possibility that we're seeing a reversal in some of the other currencies. For example, US dollar versus Canadian dollar. US dollar Canadian, so notice a very big rally here, but now sellers are coming in. So we will see if this actually, if the sellers are correct, or maybe we will see a further appreciation and a close above this blue line. If we do see a close above the blue line, we could see a nice move higher from here and a possible reversal of this particular pair. US dollar versus Japanese yen. Several previous alerts, or several previous potential entries on the short side would have worked quite well. We would have maintained a bearish bias for this currency pair. Currently we are again at the yellow line right there. Notice this is a resistance line, so aggressive traders could short here. More conservative traders, I would probably short at the maybe like 108, 808, depending on price action. But notice previous nice potential trades here that are marked with downward facing arrows. So here's AUD versus US dollar, Australian dollar. Also, I mean, this is a bullish security currently, but maybe we're reversing. The USD, it's kind of difficult to read of late. Here's a nice breakout right there on the 28th of December of last year. It was a beautiful move in this New Zealand dollar versus US dollar. So overall, dollar could be headed higher, and when we get to gold, I'll explain why I think that is this could be the case. So here's gold on the daily time frame. This is gold futures chart, continuous gold futures chart. For now, I'm treating this as a bullish chart, but I have like serious concerns about the gold miners, and I'll show you what I mean in a few minutes. So here's gold futures on a daily time frame. Basically a bullish chart. Let's go to GLD. It's this is the one we traded at MasterCharts Trading. So for example, here was a nice alert as far back as December, and then a couple of interesting touches here of blue line and the green line. So overall, this is a bullish chart, and here where the big hairy butt comes in. Here's the GDX, and GDX is under severe pressure. Notice where GDX is trading, it's trading below this yellow line, versus GLD, which is trading actually above the blue line. So the charts are significantly diverging. Who is correct? Is the GDX correct or is GLD correct? And this interplay, complex interplay of dollar index together with gold miners and gold itself, we will see who is correct. Currently, I am avoiding gold-related assets, and I'm just not sure where this is going. So if I'm not sure, I'm going to stay out. All right, let's continue to oil. Oil here, CL1 exclamation point. Light crude oil, looking like a bullish chart. This was a recent alert to my subscribers. This could be, we could go higher from here. This looks like a bullish chart. Energy, XLE, also under severe pressure here. See, the same thing as the GDX versus USO versus oil. There's a divergence here, and I'm not 100% who is going to be correct. So XLE, I'm cautioning, and if we push any lower, especially below the 64.50 line, this yellow line on the chart, then I would be completely avoiding it. But for now, it's looking like it might recover. That's a possibility. Natural gas chart. This is a natural gas futures chart. So here are the aggressive traders that are already potentially shorting here, or rather right there, the two red candles. If I was the aggressive trader, I would be shorting at this yellow line, which is $2.71. But I'm of late becoming more and more conservative, and I'm looking to short potentially around $2.95, but that's depending on price action. So natural gas currently I would be bearish on it. Finally, Bitcoin, the the commodity that everybody wants to know where it's going for some reason. I don't know why. It's just an instrument. Think about it as a normal trading instrument. And finally, we can actually trade it both on the upside and the downside without, you know, some weird procedural things about Bitcoin. Withdrawing, for example, money would have been was difficult in the past, and shorting was also difficult in the past. Nowadays we have Bitcoin futures, so that's easy way to short Bitcoin. But on this chart, what I'm seeing is the following. I see a break below this red line on the 4th of February. So here my bias has changed. My bias would be to short, to sell. And you can see there are 3 arrows here. So this arrow on the 4th of February of this year would have worked in our favor immediately. This potential trade on the 16th of February would have also worked in our favor, but it would have taken longer. It would have taken until now to work out, because notice where the stop is. This particular trade from the 10th of February has not yet worked out, because we would probably need to see a move below this red line. And notice that it's being traded currently live, so I am myself thinking about shorting it. Here on the 9th of March 2018, I thought that this is a hammer candlestick. I thought we were going to, hold this support level. It's not looking great. Look at this red candle. So it's currently 1500 here in California. So if we close below this red line, I'll probably short it myself. Same goes for Litecoin. They're all the same. Litecoin approaching the same, red levels, basically shorting levels. Ripple, bear market for Ripple, same thing. Close below the red line, short anywhere. What is that? What else we have there? Oh, Ethereum, ETH, USD. This one is the most bullish of the cryptos. Notice that so far we did not yet have a close below the red line, but if we do close below the red line, I think we can easily make a trip to about 350 bucks, which is, let me see how many percent. So that's like 40% more. That's it for this week's recap. Please take a look at my site, MasterChartsTrading.com. I have remodeled a little bit. Go to MasterChartsTrading.com, click on Alerts and Indicators. I got this nice feature list here. And here is the kicker. If you sign up for yearly indicators and alerts, you get to talk to me if you so desire. If you don't desire, you don't have to, obviously. But I'm very interested in talking to you, so please do sign up, and hopefully I will help you, or maybe you will help yourself to become more profitable, basically, and declutter your trading. So simplify your trading, your profits will roll in on their own. Alright, that's it for this week's recap. Thanks for watching. Have another great trading week. Bye-bye.